I know, it's only Monday, but today I want to take a little bit of time to talk about Watchlist Wednesday. Now that I've reviewed 5 stocks, I've also realized, kind of going back and watching them, that I haven't fully explained what I'm doing, what the purpose of all this is, or how I pick these companies that I'm going to be reviewing. So, wanted to kind of go over the portfolio that we've established so far, what I'm looking for in the future, what my strategy is, and just give some context behind it because I don't talk about it that much during the watch list Wednesdays. So maybe today is like a maintenance Monday. And we really just want to make sure we're all on the same page here, understanding my investment strategy, what makes this different than maybe some other videos you might be seeing on YouTube, and just kind of go over it from there so that this way we're all on the same page. You'll also get a chance to see the stocks that I'm looking at, what's on my radar, and as always, I'd love to hear your feedback or suggestions for what companies you think I should do, or your thoughts on my overall strategy. So, without that, we're a minute in. Let's go ahead and get that intro going real quick so we can jump right into this. So, the first thing I want to talk about is my strategy with this. Now, I've mentioned briefly in a few videos, but the reason why I'm making this series is because when I do my stock research for companies or look for new investment strategies, styles, philosophies, all of that, I really just consistently see the same format videos, the same style videos, same investing strategy, and it really seems like everybody's talking about the same stock with the same investment theory, and there's not much variety out there. And I've also noticed, I'm not going to call any names or anything, but there's just some information out there that's really bad. I saw somebody using an ETF to compare performance of a market when they simply should have just been using an index. And yes, there's a difference between an index and an ETF. You can have an ETF index fund, but the index is like a benchmark. So that's a little bit of a rant there. But I just feel like I'm consistently seeing people with the same information, and again, not all the time is it correct. I've also said this in the past, but I had my Series 7, Series 63, worked in finance for many years, working with brokerage accounts, placing trades, helping people understand investments. So I'm not saying everything I have is perfect, or I'm not saying that I'm the biggest expert when it comes to investing. I'm definitely still an amateur, and I always consider myself to be an amateur because until you spent 50 years in the industry, there's always something to learn. And the beautiful thing about finance is it's a stagnant it's a very static market, and it's always changing. So for somebody to be an expert after trading for a year and making a lot of money really quick is a stretch. And again, as somebody who's worked in the industry, has gotten the brokerage licenses, all that good stuff, I still feel there's always places to learn, and that's why I wanted to create this series, because I wanted to share the knowledge that I had while also providing just a different view of the market. So I've mentioned before, I don't like airline industries, I don't like the cruise line industry, I don't like day trading, I don't like swing trading. I'm very much a long-term, well-diversified investor. Now, is there a place for airlines and cruise lines? Yes. Is there a place for day trading? Hot take here, no, there's not a place for day trading. That's not responsible trading. To me, day trading is nothing more than gambling, which, hey, if that's your style, go for it. I'm not going to tell you not to do it, but it's not how I like to invest, and I really think more people should not be day trading, or less people should be day trading, because some people are really good at it, but the knowledge that it takes to become a successful day trader is not something you can really learn from just watching a few YouTube videos of somebody popping up a chart on their screen and saying, oh, look at these 4 signals here. Yep, that means we're going to buy 300 shares, and at these next 6 signals, we'll go ahead and sell. To me, that's not a real strategy. So I always look for companies that I can either value based on financial statements or compare to their competitors, understand the CEO, see where their long-term looks are headed to. And so that's why I'm creating this portfolio, is I'm going to try to do something a little bit different and invest in a way that you don't typically see, but we're all investing in the same market. So my strategy is going to be those long-term, potentially undervalued or high payout stocks, or stocks that have a long-term growth potential. So with that said, if you've been watching my videos, you know that we're up to 5 stocks on the watch list Wednesday. This upcoming Wednesday is going to be the 6th stock. So I figured this is a good time to kind of pause, pump the brakes, and let's take a look at everything we have invested right now. So you might have heard me also talk in the past with my videos. I tend to mention about my spreadsheet that I use. Comes with numbers. I'll pop that up on the screen while I'll talk so we can follow along with this together. It's a free template. I didn't pay anything for it, nor did I make it. It's just an easy way to track it. The one thing I can say about this is I don't know how accurate these share prices are. I'll show you what happens if never mind. I'm not recording my screen, but I think what it does is it just pulls the prices at the close of business the following day or at the beginning of business, depending on when you open it up. But it's not like a live update thing, which honestly is fine. If you trade mutual funds or if that's what you invest in, you're used to your portfolio not changing throughout the day, which is what I'm most familiar with. So for me, seeing it not change is okay. And it also helps me not make impulse reactions to the market or start to second guess my strategy. So you can see in here, we have 5 stocks and they're pretty well diversified in here. Peloton, we have a real estate fund, Home Depot, Walmart, and Shopify. Each of these are attracting a different area of business. I think probably the closest match that I have right now and in the same sector is Walmart and Home Depot. But all of these companies are ones that I firmly believe are going to have a strong future, and usually that's something that we look at from the past, or in Peloton's case, looking at the directions that the CEO is taking the company, how much money they have in reserves, anything along those lines. So these are companies that I feel are solid companies, for lack of a better phrase. I think that there's room for growth potential in here. I know Vanguard is down right now. That's our real estate fund. That's simply because it's a real estate fund in the middle of the virus that shouldn't be named, can't be named, whatever that phrase is. So, that makes sense, but we still remain profitable. Over these 6 weeks, again, it's showing the gain is $1,300, almost $1,400. It's probably actually a little bit more than that. The market's rallying pretty well today. So, making $1,300 in 5 weeks at what it is, no, that's not going to make you millions, but I'm also not investing large sums into these. Again, our strategy here is going to be for the long term. A lot of companies right now are, I think personally, trading at a discount, and so now is the time for us to take the opportunity of that long-term approach and really just take full advantage of these trading at the discount for the long term. A company like Disney was trading at $100 the other day. Generally, that's trading at around $160. So why wouldn't you want to take advantage of that time to put this into your portfolio, knowing that for Disney to go out of business, a lot of other things have to go south because of how well leveraged they are. And again, that's kind of my strategy, and that's what I want to talk about. So the other thing I've been doing here is, and I'll pop all of this up on the screen, is I've created a table. Now this one I did create, but just to see where I'm weighted and maybe areas that I'm missing out on. So, the consumer durables, that's going to be like Peloton. If you're not familiar with what that is, these are products that should last you a long time. So, in theory, they say products that last you over 3 years, not something you should be buying frequently. I think like Levi Jeans falls into this category. Might even be able to consider like General Electric in this category for things like refrigerators or ovens, stoves, TVs, all of that. So that's where Peloton falls into. We have real estate, obviously the Vanguard fund, software and tech, which is going to be Shopify since they're the e-commerce business, and retail. We have both Walmart and Home Depot in there. So again, all of these companies are ones I feel are good. You can see that we have a little overlap in the retail industry. Now, Walmart and Home Depot do in theory compete head to head, but I don't think that they're gonna wipe out each other from competition. The biggest threat there for both of them obviously is gonna be Amazon, but I think both of those are well established enough for Amazon to not even really be a threat. Let's say again, if Amazon ends up taking out Ace Hardware, well, those people that go to Ace Hardware and still go to that store are just going to go to Home Depot or Lowe's. They're not really going to jump right into Amazon all of a sudden. And GameStop. If GameStop goes out of business because of Amazon, well, the next option that you have is really just going to be to go to Walmart. If you really like that in-store experience, buying the disc and taking it home with you. So these are companies, again, that I think are going to be built for the long haul and not something that's really worth a short-term play because, as you know, with more well-established companies, they're not as volatile as not as well-established companies or not something like the airline industry. So it's not something that you can really make a quick profit off of unless you have a lot of money dumped into these investments. But there's something that I feel is just going to be consistently growing over the future. So now with that said, these are the areas that we have now. As I mentioned earlier in this video though, we're looking to build a very well diversified portfolio. Yes, it's hard to do with individual stocks because you could say that, well, only having one real estate thing is not really being diversified. Maybe that's a bad example. Having one software company is not well diversified. You need Microsoft in there, you need HP in there, you need IBM, Cisco, any of that. But I want to make sure that I'm covered around different sectors, and then we'll add to each sector kind of as we go. So with that said, we'll take a look here, and I'm popping up here just a quick preview for you to see what stocks are on my radar for the future. So you see things we're looking at is going to be payment systems, streaming services, capital goods, and food and beverages are kind of the areas that I'm most interested in right now, or the ones that I want to add to my portfolio. Truthfully, I'm always a little hesitant of doing companies like Lockheed Martin or General Dynamics because they are a little bit more on the controversial side because they do produce weapons, aerospace, all that stuff. But at the end of the day, I kind of want people to also know that there's an opportunity to make money there. Now, if you have very strong beliefs about it and it's not something you'll invest in, that's fine. But there are other people out there that are going to make money off this opportunity because it's available to them. So not buying their Lockheed Martin stock is not going to stop them from trading. And if you feel that this is a company that's undervalued, or you see an opportunity to capitalize on them trading at a discount, might be a good opportunity for you to invest in that company. Whether you hold on to it for 6 months or 6 years, that part is what is up to you. And that's kind of the point I'm always trying to stress with this here is it's your investing style. It's whatever you like, whatever you believe in. If this is a product you use on a daily basis, or if it's a company you love and love their management and how they're run, generally it's gonna make a good investment. You always got to pay attention to price, but you also want to pay attention to their competition, their direction, because the stock price could be so dictated by people's emotions or others investors' emotions. So, it's just something to learn. And again, this is just more or less like a Monday maintenance of my Watchlist Wednesday. Probably not the most entertaining video, so I'll apologize in advance about that. But really just want to make sure that everyone out there had a good idea as to what direction I'm trying to take this into and what we're trying to achieve. I'll try to do these a little bit more often. If you saw previously, we sold some shares of Peloton, which is fine because I personally still think it's a little high, but I want to keep a large position in there. And we'll just kind of take a step back and review this as we go forward. That way I also don't have to do them during the Watchlist Wednesday. And then this way you'll be caught up to date with why did I sell out of these positions? Which ones did I add? Are we going to sell out of any in the future? Right now I don't plan on making any other sales. I've been monitoring Shopify. So for when we can add the 2 shares, that's something I'll probably include on a maintenance Monday kind of thing. But yeah. I hope that just really helps clarify my investing strategy, why I'm making these videos most importantly, and also just helps you understand the direction I'm trying to take this in. Because I understand if you don't know where I'm headed with this, then it really just looks like I'm picking stocks out of the blue, spitting out a few numbers to all of you and talking about press conferences and then calling it a day. So hope that was helpful. As always, you could be anywhere in the world, but you're right here with me, and I really appreciate that. So thank you so much for your time today. I will let you go ahead and enjoy the rest of your day, but if you haven't, it would be super cool if you wanted to subscribe. If you liked the video, also like the video. If you didn't, again, hit it with the thumbs down, and leave it in the comment section down below what questions you have for me, or if there's any stocks that you think I should add. Thank you, and I'll see you on Wednesday for Watchlist Wednesday. Let's take a guess. See if you can guess which company I'm going to talk about on Wednesday. I've already started my research, so I already know where I'm going, and I kind of hinted at it earlier in this video. So I'd love to hear your guesses for what you think I'm going to do on Wednesday. All right, that's enough for today.